We're off to Button Moon and we follow Mr. Spoon Button Moon. Going to show you how to withdraw some money and answer quite an important question today. And a warm welcome to one and all. For those of you not seen me before, slangers, I am the singing talent that is the Scruffy Trader. And I do say that in very inverted commas because my singing might be terrible, but I'd like to think my trading's pretty good. It's the weekend, got my coffee, just chilling out, so it must be coffee time with Scruff. So what are we doing today? Well, I'm going to log on to my 5%ers account and I'm going to show you how to withdraw some profits. And while I'm on, I'll sort of show you the statement as well, just so that you can see the journey of that small account growing. Because the idea with it is to kind of show you it from inception and then right the way through. Because if you followed my journey last year, when I came to the 5%ers, I was a little bit unsure, but I took it from a small amount into 6 figures, and those 6 figures are paying me very well. So much so, I trade a number of funds for the 5%ers themselves. And if you go in the description below, there's an interview of me because of the milestones that I made. And then I'm going to answer quite an important question that Winky posed to me on Friday. Now, I did a walkthrough of everything I do for her, kind of teaching her how to be a trader. And I did it sort of also for the guys in the Scruffy Squad to see, and with luck they'll drop in and they'll kind of explain what I was doing. But a question that was raised was, how do you stay in a trade? So I'm going to kind of answer that. I'm going to put a different spin on the way that you normally hear things, because I do it slightly different. So let me fire the screens up and we'll have a little look at what this statement is, and I'll show you how to draw some money out of it, because it's ready to pop. So this is the 5%ers. Just a quick recap if you've never seen it. And if you are interested in trying this out, there is a 5% discount link down below in the description. There are other links as well. I touched on the Scruffy Squad. It shows you what that is. There's access into the Discord group as well. And also, if you're looking for a decent broker of your own, there is BlackBull 500-to-1 leverage at this moment in time.
Are you serious?
And talking of time, if you drop some money into it, trade a little bit, you show commitment, I'll show some commitment as well, and I'll give you a free one-to-one session. How's that? So what is this? What are we looking at? Well, this is the 5%ers. It's a prop fund, if you're not sure what a prop fund is. It's a company that will put the money up to go to market, and then there's a profit split. Very, very simple. With these guys, it starts at 50-50, and then depending on what you're doing, that can increase, as does the fund size that you trade. Now, they provide lots and lots of resources, and you will find them kind of here. Whoops. There. There's courses, webinars, you name it, it is in there. And if you go through it, you'll even find training sessions from myself, because I do help these guys a lot. And what they've currently done, they've brought in this chap.
No way!
Dr. Gary Drayton, very famous coach to top tier traders. And again, the 5%ers are bringing value by bringing this chap in to do a series of webinars. They start on the 3rd. I will definitely be part of that, okay, because I want to see what this chap has to say. but it's because they've got your best interests at heart. So how does it work? Well, you can have a 100k boot camp, costs you €50 to get in, and you go through the 3 stages, you get 100k. That is good value whichever way you dress it up, when you couple it with the amount of education you get, or you go through instant funding. If you think you know what you're doing, you can go live into the markets from day one and start earning your profits. And it's very simple. You've got your 24, your 40, your 80. You can either look at it as an aggressive. Personally, I would look at the low risk. It is a far better program because it calms you down and it pays you well. This is the most popular one, the 40k, which is what I'm about to show you. And as you go through your milestones, well, it just keeps doubling up. So all you've got to do is 10%, and then it moves up constantly. So from 40, the next milestone is 80, then 160, 320, all the way up to 2.5 million. Now, that is life-changing money. So has it changed my life? In a way, it has. Because I've always traded my own funds. And when I came to these guys, I didn't really want to be part of a prop fund. I always thought, why would you pay somebody to trade? Ludicrous. That was my first thought. But the guys in the Scruffy Squad, little salute to Volga, because that's who goaded me into doing it. They wanted to try it, and I thought it was only fair that if they're listening to what I say, I should follow the same path, and then they can see it in real time as well. And also, from my point of view, it shows what I do from a third party. You know, nobody can manipulate the stats that are on here. Now, I have my own way of trading. It has been profitable and paid me a winning year for the last 5 years. I've not lost a year in 5 years, not one. And if I think about it, I haven't really lost a month either. I lose days, but I get paid every single month doing what I do. I get shredded constantly, but it's because you don't understand what I do. But this shows it in black and white. Okay, so this is a 40k. I currently have a payout ready, which you can see here. I've got a decent equity curve. In this period, I've done 96 trades, 86% strike rate on it. But the part that I draw attention to all the time, because I don't believe in risk reward and all of this, it's setting you up for a fall. I believe in trade management. Two different things. And the part of it that I keep an eye on is the profit factor, because if you have a profit factor greater than 1, it means what you're doing is not only profitable but sustainable. Mine is running at 5.2 on this account. I don't have anything running for the end of the month, and there are all the deal tickets. So I can't get it any more black and white than that, guys. All right? Trade management is key. So how do you get your money out? It's very simple. I rolled the money over from last month because it was only a small amount. And I am now looking at 590 as a payout. So that'll do me quite nicely. Submit your request. That's it. That's my payment on its way.
Good job.
To draw out some of this as well, so I'll just show you that it's not a fluke. This is another account that I run. Again, it's ready for a profit payout. In this period, I've done 352 trades on this particular account, 90% hit rate, and a profit factor greater than 1 of 3.48. Again, no open trades on this, so it's ready to start a clean slate next month. And again, there is the deal tickets, of which there are hundreds of them, all the way down. You know, you'll often see that it's cable. I trade cable pretty much all the time. But there you go. loads and loads of deal tickets. And again, a decent equity curve. And that's kind of the way that it works. And if I look at my daily win rate, just to give you an idea, as you can see, running back over the last 2 periods that you can see, I've lost 3 days. 3 days in 2 periods. That's it. Right? So I think this isn't bad. And again, we're in for a profit payout. This one pays me all the time. And we've now got another 384 to come out of this one. So we'll have that for the end of the month. So just shy of $1,000 for doing what? For doing my job, basically. That is the easiest way to say it. Because all I ever do with my account is I mirror what I do normally. So this is additional to me. You know, I do, as you know, have a multi-screen setup, so it's very easy for me to run multiple accounts. And over here, if you haven't seen this sort of office before, and you see it from time to time, you'll see there's another setup there and there's one here, because my dear wife, who is out at the moment, is also learning to be a full-time trader.
You sexy thing, you.
So all we're doing is building up pots constantly. And as part of showing Wink how to work the charts, she raised a very good question, because day trading can be quite difficult in the sense of the markets are moving backwards and forwards constantly, as we know. How do you know when to kill it? And how long do you stay in a trade? Well, I thought I'd go on the whiteboard and I'll try and make some sense of it. So come with me and let's see if we can answer that question.
Well, we're waiting.
Right, boys and girls, fully lubricated and ready to start singing. So where's my microphone?
No, God! No, God, please, no! No! No!
I was all worried for a second there, thought I was going to burst into song. You're probably right, I will do at some point, because Winky loves my singing. Well, she loves it when I'm not here, to be honest. Anyway, what else does she love? She's actually beginning to love the charts. And certainly from Friday, where she went through a full walkthrough from a clean chart with nothing on it, build up into a bias, build up into a trade idea, and then see that trade idea play out. And because of that, she raising a number of questions. And one of them was, how do you know how long to hold on to a trade, or where to get out of a trade and everything? Because that is one of the fundamental questions that all traders ask. You see, you can get into a trade on the flick of a coin, but how you manage it thereafter is what makes or breaks your trade. Now, I've put 4 kind of key points on the board: off, levels, oscillators, and time. Now, I'm going to concentrate mainly on time, because this is kind of how I do it myself, and it is something that I want to draw on. And in future videos, if you ask, drop it in the comments below. I'll certainly explore other ways of doing it for you. I've been around the chart so long, I've seen it and done it, you know, and there's no right or wrong way in trading. If it works for you, fantastic. Don't let anybody tell you otherwise. But there are some key points to trading that make you profitable. And my first one is less is more. I stick to that. I never overtrade. And the other principle is the quote that I have behind me: know thyself. You need to know what kind of person you are in order to trade. And that's where these 4 bullet points come into play. You know, and I know you scratch your head, I don't get that. But think about it. What is the full quote? It's know thyself, it is the beginning of wisdom. Well, if you have wisdom, you have knowledge. Knowledge is power. And that power is the difference between you losing and winning. So let's just quickly glance these and then I'll go through it. The first one is as simple as it gets. For whatever reason you're getting into the market, you set your stop, you set your take profit, and you switch the machine off and walk away. Now that directly ties into number 4, which is where I'm going to discuss. Okay, the next part is you target it or you level it. So you have a level, you have got a close above that level, you may have a moving average, and as long as the price is above that moving average and you have your level up there, what you've created is the moving average and the level is give you a reason to get in, and your target, well, it's either sort of an arbitrary 20 pips, if that's what you're after, or that level. And it's a case of all or nothing. You don't come out unless it hits 20 pips, or you don't come out unless it hits that level. Again, similar to switching it off. But if you're watching the screen, you need to know thyself. Because if you're of a character that fiddles, watching those candles can spook you out. They genuinely can. Now what if you don't want to work to a level or a target? You might just want to see how far the market can move to. Well, that's where number 3 comes into it. An oscillator. Now we all know what an oscillator is, but just quickly if you don't, it is a bounded indicator between 2 levels. It's normally 0 and 100. And the line that you see that moves up and down like so cannot exceed 100, can't go below 0. And you would often have another boundary here, which is what's deemed oversold, overbought. So if the price is down here, we know it can't go below 0, so therefore it has to come back to the 100. You would enter as it comes back into the midsection, this bit here, and you exit when it goes into what's called overbought. Now these are set at different levels, depending on what it is. A stochastic is normally 80-20 and RSI is 70-30. You can change them around a little bit to suit, because there's 101 different oscillators like that. But the principle of staying in the trade is you are working from one extreme to the next extreme, and that'll hold you in. The danger with it is this doesn't necessarily go straight to the other side. It could maybe get halfway and then decide to come back down here before it goes up there. So again, it depends on know thyself and how much pain and waiting you're willing to give. It's very difficult. Or you can do like a combination of all of them. But the one I'm going to concentrate on is time. So let me clean this all down and I'll explain it ever so slightly in my strange way. If you ask nicely, I'll sing while I'm cleaning this. If you do want a song sung, by the way, just drop it a little message and I'll sing it for you, because I've sung all sorts. And why? Because I couldn't care less. Right. Time. No, I was going to start singing Time by the Birds, but then maybe the youngsters won't know what that song is. But what is time? Is it your friend or your enemy? Well, for me, it's my friend, because it allows me to be patient and it allows me to allow a trade to grow. Now, I trade slightly different to most people, as you know. In fact, I trade completely different to the way that you normally see, because let's be honest, you watch this.
You ding dong!
Give it to me again.
You ding dong!
I know. This is messed up. These guys, they're fucking idiots.
Bollocks. And 95% of what you watch and believe is bollocks. Why? Because it's just recycled garbage by people who don't actually do it. Now, as you've just seen, you've seen my statements. I've done this a long time, and I look at it from a business perspective. And when I started to learn trading from my former business, it was under those circumstances. So gambling is not in it. Everything is a measured decision. So why is mine different? It's because it's planned. So what I do is I do a top-down analysis to get into a trade, and then I do an upward analysis to get out of a trade. So I'm actually coming down into the entry point and I'm going up to the exit point. So what does that mean in real terms? Well, it's very simple. What is this? Now, most people will just go, well, that's a candlestick scruff. Correct. But what is it really? What is it telling you? Because if I showed you that on an hour's chart, or a monthly chart for that matter, but hid the time frame, and then pulled up a minute's time frame and hid the time frame, so you can't see it, you just see a naked chart on each without any times, that would be identical on both. So what is it? Well, it is a unit of time, as we've just said, but if you can't see the time, it is also a unit of information. It's info. Okay. Now the basic info, obviously we know it's, for argument's sake, if this was going down, it's an open, close, low and high. If we were going down, and if we were going up, it's an open, close and the high and the low stay in the same place. But if I'm analysing and I'm coming down from a daily to an hourly to get my trade idea, what information within this 1 hour is there? Well, it gets broken down to its smallest component, and that's what gives me my entry. Now, if I'm working on a 15-minute chart, it is actually 4 15 minutes, which is obviously, but each one of those 15 minutes is a little piece of information that built that candle. And if I want to zoom in even further, I can then look at a 15-minute candle and it would be 3 5-minute candles. More information. So what it is, it's actually the same piece of information broken down and filtered out. Okay? So in this instance though, for whatever reason, I am wanting to enter on a level. I've seen the price break said level, and you have a moving average and the price on the second close is above it. I want to enter the chart. So how, if I saw that, what is the process? Well, the process is very simple. I look at the chart at the top of each hour. So say it's 10 o'clock in the morning, 10 a.m. All right. And I have just seen that. That is my criteria to think I want to go into market. Now for the next hour, I am looking to get into the market, but also get out of the market. I am looking to trade a time period rather than a target, but I am a target trader, so I build targets into it as well. My level is up here. Now, the distance between them could be 40 pips. All right. Now, I think within that hour's time frame, because the ATR tells me it can't go that far, I'm going to be conservative and I'm going to target 20 pips. So I will have an intermediate target here. So that will be my trade 1. Okay. But what does the time part come into it? I mightn't enter the chart because I'm monitoring these 4 15 minutes till 10:30, which leaves me 2 closes left till the top of the next hour. So what I would do is I will put my arbitrary target in of 20 pips here, and then I'll go back away from the 15 minutes and I'll watch them on an hour's candle. And what I'm looking for is that time close. Okay. Now within the next sort of 30 minutes, two 15-minute closes, I am either going to hit my 20 pips and I'll be happy because I've hit it within the time period, or at the top of the next hour, I'm going to make a decision. Now, if the price has come up, but then has started to come down and it has crossed the moving average for argument's sake, and it is now 11 AM, I will take my profit, that's assuming there is some there, and then wait for it to reset and re-enter. Now if the conditions here are below, I mightn't re-enter till now 12 PM, 12 o'clock. And then I'll do the process again. And this is all for day trading, not so much for swing trading. Swing trading is very different. Swing trading is sort of number one, take profit and a stop, switch the thing off and look at it once a day and either adjust your take profits if you think it's going to go further and move your stop into profit by trailing it behind a moving average or watching an oscillator. There is a strategy I use called the whip, which works very well on a daily, and it is based on oscillators. But in this instance, what I'm trying to explain, probably badly, is use time to your advantage. Instead of this, think about the chart that you analyze to get your idea. It doesn't have to be an hour, it could be 4 hours, it could be a daily, it could be 15 minutes. But you're looking to be closed at the end of that time period. So you would then come down the chart to a smaller time frame to get in. So once you're in, you then go back to your bigger chart and you watch for it to close. Now, on the point of closure, make a decision. Do I stay in and hold it for the next hour? Or do I close it off because the conditions have changed slightly? It's just a different way of thinking about it. I'd be interested in your thoughts in the comments. By all means, if you don't fully understand it, I'm easy found. You'll find loads of different bits and pieces down in the description below. But I hope it kind of puts your thinking cap on a little bit as to how to look at the market slightly different. Because the markets are individual. Because we are all individuals. X does not mark the spot, and it never will. And the sooner you unlearn most of what you've learned and start putting in some basic plans around your own personality, know thyself, then you may start to succeed. Okay? So I hope that makes sense, and do keep asking me for different types of videos, and I'll do my best to try and explain it in my strange way. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.